Problem 10.4 is preparing to close the books at the end of the period. So we're preparing closing entries. We have a worksheet for Wilderness Rentals. The period ended December 31st. We record the closing entry for revenue, expense, income summary, and withdrawals. There are 4 closing transactions that we will have. So we start with all our revenue accounts. Looking from the partial worksheet, we see a balance for equipment rental revenue, and that could come from the general ledger as well. We know revenues have a normal credit balance, so we're going to debit equipment rental revenue for the $14,965. That's the only revenue account we have. So we know to close revenues, we debit the revenue, we credit income summary. So my debits equal my credits. The amount is the same, $14,965. Second transaction closes the expenses. Expenses have a normal debit balance. So I see advertising, maintenance, rent, and utilities expense with their respective balances. They will all be credited. Expenses have a normal debit balance to bring those balances to zero. We will credit the expenses again for their respective amounts. So the $1,500, the $1,560, the $1,000, and the $1,230 added together gives me a total expenses of $5,290. I know I'm going to debit income summary for the total of my expenses to make sure my debits equal my credits. So I debit income summary $5,290, credit advertising expense $1,500, maintenance expense $1,650, rent expense $1,000, utility expense $1,230. That closed our debit expense accounts into income summary. The third closing entry closes income summary into the owner's capital. Now we know we can take the difference of the income summary, the $14,965 and the $5,290, to find the amount that needs to be closed into income summary and post those first 2 transactions, or it will always be the same amount as net income or net loss. Because we have net income, we're going to debit income summary. My revenues are greater than my expenses. And credit the capital. That increases the capital. Okay, we have net income. That's good. That increases the owner capital account. So we debit income summary, $9,675. Credit Ronald Hicks Capital for $9,675. That is net income because my revenue are greater than my expenses. Or I could have posted the first 2 transactions to find my account balance of income summary. Would have been a credit balance $9,675, and then I would debit income summary to close the income summary account. The fourth closing transaction closes the owner withdraws into the owner's capital. Owner withdraws has a normal debit balance, and we see that from the worksheet. So we're going to credit Ronald Hicks withdraws for $2,350 to bring that balance to zero. And to reduce our capital, capital has a normal credit balance, so we're decreasing the capital by $2,350. So we're debiting Ronald Hicks Capital $2,350, credit Ronald Hicks withdraws $2,350 for our fourth closing entry to close the withdraws into the capital. What is the capital account balance after posting closing entries? If we quickly take a look, we had a balance of Ronald Hicks Capital of $19,775. If I add to that the $9,675 and subtract the $2,350, capital has a normal credit balance. I add the capital, subtract the withdrawals, and that would give me a balance of $27,100.